Welcome back to this channel. It's another day that we are continuing with the revision or tackling questions on business data analytics that were done in the just concluded sitting, April 2024. So far, if you have not watched, we have already covered question number 23, which was for management accounting. And for today, we are covering question number 24, which was under specialization area. Remember, in this sitting, two questions were for specialization, where you are to do one, that is audit and taxation. And for the audit, as usual, they tested what we call the audit schedule. But this time around, the audit schedule was given as a narration. Transactions that happened as narrations. Then it is you now to prepare what they require. So it was under section 3, and you are only to answer one question in this particular section. So I shall go through it. It question number 24. You have a new audit client, Miriam Akelo, who began a dental practice at AMK Doctors Plaza in the year 2023. The following transaction took place during the year ended at 1st December 2023. Number 1, Miriam opened a separate bank account for the practice and deposited 5 million as capital. In addition, she obtained a loan from the bank amounting to 5 million at an interest rate of 12% annually. The loan will be repaid over 5 years period at 1 million annually, together with interest due at the end of each year. Miriam, number 2, imported 3 dental equipment at a price of 600,000 each, and incurred freight, insurance, and port clearance cost of 200,000. The equipment is depreciated over 5 years. So over 5 years. Number 3, Miriam also bought other equipment for 1 million, furniture and fixtures for 2 million, dental books worth 500,000. Both equipment and furniture were to be depreciated over 8 years, while the dental books have a useful life of 5 years for the purpose of amortization. Miriam hired a dental assistant who also doubled as clinic administrator at 60,000 monthly salary, a receptionist carrying out other clerical duties at 30,000 per month, and a cleaner, that is a casual, at 15,000 per month. They all began employment on 1st January 2023. Miriam also hired the services of 2 other dentists to serve the increased number of patients or when she was visiting other hospitals for consultation. During the year, the 2 dentists were paid for professional service of 2 million. In addition, Miriam offered some interns learning opportunity and paid them total stipend of 300,000. So during the year, patients paid 6 million in cash, while those on various insurance and medical covers were treated at a total cost or a total of 4 million. By the end of the year, the corporates and insurance company had paid 2.8 million directly into the business bank account. Miriam also noted that client owing 200,000 became bankrupt and will likely not pay, while the balance had nearly 0% probability of default. The cash that was received was banked after paying for the following items: so surgical and prescription. So we are told that the cash that was received was banked after paying for the following items. So the surgical and prescription medicine 500, stationery or 40, cleaning consumable of 20. Cash drawings for personal use by Miriam averaged 40,000 per month. By the end of the year, only 120,000 was available in the office safe. So this was the closing balance. Majority of transactions took place in the bank, except for the one highlighted in note number 7. So note number 7 is the one that was done in cash. Miriam placed some amount in fixed deposit account and earned interest of 120,000. Other expenses were mainly salaries to staff, interest on loan, rent of 100,000 per month, electricity and water 60,000 for 11 months to 30th November. She also paid 30,000 as subscription to the dental association. Note that Miriam had paid 3 months deposit on rent, which was refundable upon termination of the lease. Miriam also drew 60,000 every month for personal expense from the bank. Meanwhile, the electricity and water bill for December had not been paid, but was subsequently received and settled in January at 4,500. Miriam bought surgical and prescription medicine worth 1.5 on credit by the end of the year. She had already paid 800,000 of the amount owing, while surgical and prescription medicine worth 400,000 were available by the end of the year. So you are required to prepare the audit schedule showing the following 4 sections having the debit and credit column. So the draft trial balance before adjustment, then adjustments, profit or loss items, and the financial position items. So here we shall prepare our trial balance, debit and credit, adjustment, profit and loss items, and financial position items. So we need to deal one by one for this particular question. Starting with note number 1, I told Miriam opened a separate bank account for practice and deposited 5 million as capital. So the two accounts, because here is double entry, we need to know we had capital and bank. Capital and bank. So for the capital, we credit capital 5 million and we debit bank 5 million. So 5 million was deposited in bank. The source was capital. So we credit capital and we debit the bank. That is the first part of the transaction in note number 1. The second part, in addition, she obtained a loan from the bank amounting to 5 million at an interest rate of 12% annually. So we have loan 12%. Yeah, 12% bank loan. 12% bank loan. And for the bank loan is a credit, so still 5 million, and the effect, it was banked. So we shall add it here, this loan, we shall add it to bank. So we credit the loan, we debit the bank because money came to bank, or it was deposited in our bank account. Then the same note, so that we can exhaust that, the loan will be paid over a 5-year period at 1 million annually, together with interest due at each end of each year. So we have repayment of loan 1 million. So that one we shall put it under adjustment. Yeah, we shall debit the loan because it will be a repayment. We credit bank. The repayment of the loan. So bank will be credited with 1 million and the loan will be debited because it will be a repayment of that particular loan. Then we have the interest on loan. Interest on loan, 12%. So that one will be under the adjustment, interest on loan. And remember, our loan is 12%. They shall take 5 million by 12%. So shall be paying an interest of 600,000. So we shall credit the bank because that's where the money will come from for paying the interest. We credit the bank under the adjustment. Yeah, so we pay the loan of 600,000. Loan of 600,000. Then the next thing after the interest on loan, we are done with note number 1. Yeah, note number 2. Miriam imported 3 dental equipment at a price of 600,000 each and incurred freight, insurance, and port clearance cost of 200,000. The equipment is depreciated over 5 years. So over 5 years. So here we are importing 3 dental at 600, and we have these the cost insurance. Remember, this one will be capitalized. This cost that we incurred, the freight, insurance, and port clearance, will be capitalized so that it will be CIF, the cost of that equipment. So there were 3. So dental equipment, I will put it under the adjustment. Dental equipment, and for this dental equipment, I will have dental equipment. So there were 3 of them. I'm trying to see here. Yeah, we shall put it under the adjustment. So it will be 600,000 by 3, and I will add the 200,000, the one that we incurred for the freighter and for the clearance, meaning that the total cost of the dental equipment was 2 million, and that one we shall pay it from the bank. We paid from the bank. Yeah, because it was, we told all the transactions apart from the one in note number 7 that was for cash, the others were from the bank. So we shall pay that from the bank, the 2 million, and we shall depreciate these dip on equipment, dental equipment that is being depreciated over a period of 5 years. Yeah, depreciated over a period of 5 years. So here, still under the adjustment, shall divide by 5, and we shall have accumulated for that. Accumulated depreciation on equipment, on dental equipment. Accumulated, we shall credit the value there for the 400,000. That is what was accumulated for the dental equipment. And I think for the dental, we are done with this. So the next one, under number 3, Miriam also bought other equipment for 1 million. So we shall have other equipment. So other equipment, other equipment for 1 million. So other equipment, other equipment for 1 million here. So remember, this one that we are buying from bank. So shall be making our adjustment in bank. Make our adjustment in bank. Then we had furniture, fixtures and furniture, fixtures and furniture, fixtures and furniture. So fixtures and furniture and fixtures 2 million, and dental books 500. Dental books of 500. And before that, so that for consistency, we had some depreciation. Yeah, both equipment and furniture are depreciated at 8, to be depreciated over 8 years. So here, before I deal with the furniture and fittings, dip on other equipment, that is being depreciated over a period of 8 years. Yeah, and I will have accumulated depreciation, on other equipment. Accumulated depreciation on other equipment. So these are supposed to be depreciation on other equipment, this value. Then now we have furniture and fittings. Furniture and fittings, I think we have seen it at 2 million. 2 million. Furniture and fittings, 2 million. So 2 million, and we pay through bank 2 million, and we depreciate that. Dip on furniture, dip on furniture, still under 8 years, and we have accumulated depreciation on furniture, accumulated depreciation on furniture. of 250. Then we have dental books. Dental books, I think you have seen is 500,000 for the dental books. Dental books, yeah, these are dental books 500. For the dental is being amortized over 5 years. So first we shall credit the bank for the dental books of 500. Then we have amortization of books, amortization of dental books over 5 years, and we have accumulated amortization, accumulated amortization of 100,000. Yeah, that way. Then the next thing, we are now at number 4. Miriam hired dental assistant who also doubled as clinical administrator at 60,000, monthly salary, reception of 30, and casual cleaner of 15. That means the salaries that we're paying per month, 60 plus 30, that is 90 plus 15. Yeah, so salaries and wages. Salaries and wages. So here I will open bracket. We have 60,000 plus 30 plus 15 by 12. We multiply by 12 for the entire year. It will give you 1260. What we are paying in cash, or what we are paying as expenses through bank. We add it through bank. Salaries and wages. I think we are done with salaries and wages. Number 5. Miriam also hired the services of 2 other dentists to serve the increased number of patients, or when she was visiting another hospital for consultation. During the year, the 2 dentists were paid for professional service of 2 million. In addition, Miriam offered some interns learning opportunity and paid them a total stipend of 300. So professional fee of 2 million. You can combine the two, professional fees and stipend, which will be 2.3. Professional fee and stipend 2.3. We pay them through bank. Still pay them through bank that way. Then we are done with that. Note number 5. Yeah, number 6. During the year, the patients paid 6 million in cash, while those on various insurance and medical cover were treated at a total cost of 4 million. By the end of the so we have the sales. So assuming this is sales, what we sold as, or income. So you can talk about income or what? Yeah, sales for the service. Sales for the service that we sold. We sold services valued at 10 million. Services valued at 10 million. So this 10 million, it was in form of cash of 6 million. 6 million was cash and receivable. Accounts receivable of the balance of 4. So 4 million was receivable and 6 million was in form of cash. 6 million was in form of cash. That way. So remember, this sales is sales of services. Yeah, don't confuse it. Sales for services. Then what else? We are told that during the year, by the end of the year, the corporate and insurance company had paid 2.8 million directly into the business bank account. We had already received 2.8. So out of these, we received 2.8. So shall credit this 2.8 million, and we shall debit now on the bank, because that's money that we received, 2.8. So we received 2.8 2.8 million out of this. Then there was a statement that 2.8 directly into the business bank account. Miriam also noted that client owing 20,000 became bankrupt and will likely not pay, while the balance had 0% probability of default. So we have bad debts of 200, bad debts of 200,000. So remember, bad debts will affect this. It will affect this one. It will reduce the receivable. So here you can add this value of 200,000. Yeah, that way. That is our bad debts. Then we are done with note number 6. Number 7. The cash that was received was banked, but after paying the following items. So we have surgical and prescription medicine. So we have surgical and prescription medicine. So we have surgical and prescription medicine, stationery. So we had stationery, and after stationery, cleaning consumables, and cleaning consumables. So cleaning consumables, so consumables. Yeah, that way, cleaning consumables. So surgical was 500. We paid, so these are expenses. Surgical was 500,000 under the adjustment. Stationery was 40, and so 40,000, and consumables was 20,000. Yeah, so 500, 40, and 20, and these were paid from cash. They were paid from cash here. So from cash, so we shall take this and we add this and we add this 20 that way. And we are also told that cash drawings for personal use by Miriam averaged 40,000 per month. By the end of the year, only 120 was available in office safe. So we have cash drawings 40,000. So drawings, yeah, drawings for 40,000 per month. This will be 40 by 12, 40,000 by 12, which will be 480. So here we shall add 480. I will not use the cell reference. 480,000. Then we had the one that was left, 120. We need to know how much was supposed to be deposited. How much was supposed to be deposited, because we have the 1040 plus 120 that will remain. 120 that will remain. So I'm supposed to have 1160, and 1160. Is there any other thing? So 6 million. If I can do this, 6 million was the total cash. We minus this value, the total expenditure. That means the amount that we deposited is supposed to be 4840. The amount that was deposited is 4840. So here we shall add 4840. I will add 4840,000, and I'll come and add it here, 4840, what was deposited. So that the essence we need to remain with 120. When we minus this and this, we remain with 120, the cash that was supposed to be in the cash account by the end of the year. Then I think we're done with that. Number 8, majority of transaction, we are told Miriam placed some amount in a fixed deposit account and earned interest of 120. We have interest income. in interest income of 120, shall use it as an under adjustment 120. That one will go to bank, can add that 120 that we received. Then other expense were mainly salaries to staff, interest on loan, rent of 100,000 per month. We have rent of 100,000 per month, so 100,000 by 12, which will be 1.2. So we add to the bank because we are paying from the bank 1.2. Then electricity and water 60 for 11 months, but we had this one for December 4/5. So electricity and water, electricity and water over 60. The cash that we paid, cash was 60, and we have an accrual of 4/5 that was yet to be paid. We shall have accruals are 4/5, which will be a liability. Then the 60, we shall deduct it from bank plus 60,000. Yeah, 60,000. Then she also paid 30,000 as subscription to dental, so subscription of 60. Subscription fee of 60,000. 60. So we shall add it here. 60. Is it really 60 or 30? 30,000. So it will be 30. Here it's not 60. 30,000 as our subscription fee. Subscription of 30,000. Then the other statement I think we're done is that we're done. Note that Miriam had paid 3 months deposit on rent. So we have rent deposit. That's an asset. Rent deposit. So rent deposit for 3 months. Remember he was paying 100,000. They multiply by 3. 30,000, 300,000. Yeah, bank is the one that will suffer because he paid through the bank 300,000, and it will be regarded as an asset. Then Miriam also drew 60,000 every month for personal expenses from the bank. Meanwhile, the electricity, I think that one we have tackled. So we have these drawings of 60,000 from the bank. So we shall add the drawings that we had for 80 here. We'll close this. Close this. Then plus the 60 by 12, of which 60 by 12 will be 1.2. 1.2 or 72. 720. Yeah, 720. We shall minus 720 from bank. 720,000. 720,000. Then that was the drawings. Another part of drawings. Miriam bought surgical and prescription medicine of 1.5. So we have purchases. Yeah. So purchase of medicine. Purchase of medicine of 1.5. I can put under the main trial balance 1.5, and out of 1.5, it was on credit. So accounts payable. Accounts payable of 1.5. 1.5 accounts payable. By the end of the year, she had already paid 800,000 of the amount owing. He had already paid 800,000. So here we shall debit 800,000 that was already paid, and we credit this bank that amount that was already paid, the 800,000. Then, while surgical and prescription medicine worth 400 was available by the end of the year. So the closing inventory. So closing inventory, what we had already purchased. So this one will affect the income statement, the P&L item, where we shall credit it 400,000 and we debit it in the financial position as an asset 400,000. Then we shall have the profit or loss. Profit for the year. We have profit for the year. That way, I think we are done. Covering everything that was supposed to be tackled. So let us see whether it will balance. So it equals here. Up to that point, and I will autofill this up to this point, and you'll find that that one is agreeing. So the trial balance, the initial trial balance is agreeing at 21,500 and the adjustment at 23,649,500. Yeah, so majority of the items, this question, the only thing that was difficult to establish is the items that will be reflected under the adjustments and the ones that will be reflected outrightly under the trial balance. Remember, the trial balance only takes the end balances. Yeah, the end balance. So in the trial balance, you cannot fix both the debit and the credit at the same time, because you normally fix only the end balance. And that's why the figure that is being adjusted, we are adjusting them under the adjustments. That way, yeah. So remember, this is a suggested working. We are not casting it on a stone as the final answer for the question. It's just but suggested how you were to do. And the best thing, when they are marking in here, they normally look at the best. Like here, they are awarding 20. Yeah, 20 marks. That means trial balance will be having 5 marks. Adjustment will be having 5. P&L will be having 5. And financial position will be having 5 marks. And 5 marks each entry, at least 10 entries that have a mark each. 10 entries at have a mark each, and it will give you the 5 marks. Yeah, you'll find that for this one, even if you are wrong, you'll get the 10, because here you have 1, 2, 3, 4, 5, 6, 7, 8. At least you have 8 entries under this, but we need at least 10 for you to get that. So the other marks will come to the adjustment, because adjustment is where we have put a lot of emphasis on. So the second part is just putting the P&L item. Yeah, P&L item starting with interest on loan, which is an expense. So interest on loan, and we have the depreciation. Then we have the depreciation of other equipment. Then we have depreciation on furniture. Then we have amortization of books. Then the salaries and wages. Then we have the professional fee. Then we have the sales. In this case, after the sales, we have the bad debts. And here now, after the bad debts, we shall take up to the cleaning consumable. Then after that, we have the interest income. It will be part of our income. Shall credit that. So electricity, rent, and electricity and water will be an expense. Accrual is a liability. Subscription fee will be an expense. Purchase of medicine, yeah, still that one will be featured as an expense. And I think those are our expenses. And the closing inventory that we have there, and I will use this to get the totals. Yeah, so you can get now the difference to be the profit. Here we have 10,520 and we are having it 85. So the difference, even if you can do it here, 10,520, 1, 2, 3, and you minus 85, 89, 500, you'll get 1930 here, 1930, 500, and when you put that, it's supposed to balance at 10,520, 10,520. So that is the profit for that particular year, and we shall take it to this under the retained, under the retained earnings. So when we start now from top, so our capital, we shall credit our capital, our bank. So remember now our bank, we shall take what we have. At the beginning we had 10, we added 7, and we minus 13. You shall remain with 39. So the loan, we had 5, we repaid 1, remain with 4. Then dental equipment, we shall have it at 2, and we had accumulated depreciation on that. Where is it? Accumulated depreciation on dental equipment. Then other equipment, we had 1 million, and we had accumulated of 125. Then we had furniture of 2 million with an accumulated of 250. Then we had dental books 500 with the accumulated amortization of 100. And the other thing there, we have cash of 6 million, and you minus this, remain with 120, the one that was balance. Receivable, we minus 3, remain with 1 million. And the next one, we have drawings, drawings of 1.2. Then the rent, you're supposed to have the deposit, the deposit. So first, before that, we have accrual of 45 is a liability. Rent deposit is an asset that way. And then the accounts payable, we had 15, we had only paid 800, so you remain with 700. And then the closing inventory, have it, and the profit for the year, and you're supposed to balance that. That is 12, 5, 10, 12, 5, 10. So that's how that particular question was supposed to be tackled. The way the question was supposed to be tackled for you to get the entire marks, in this case. So that is the audit, our audit schedule. So here you can put the bottom border. So this audit schedule, audit schedule. So I'll change that to Times New, and so you can put it at 16. So that's how it was supposed to be done. You can bolt it. That is our audit schedule as far as that particular question is concerned. So continue subscribing to our channel so that you can get updated information on when we are posting, on when we are tackling a new question when you're tackling a new question. Yeah, so that's how the question, that's a suggested solution for that question number 24, for the question number 24. Yeah, the only part that may be having a problem is identifying the items that were supposed to go to the original trial balance, but the P&L and the financial position, those items you will get, and part of the adjustments, yeah, you will get those marks. Yeah, it was not an easy question because of identification of items and where to place those particular items. So thank you, and continue subscribing.